video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy, Camel, and I always say it, but it is really, really true, okay? These are wild times to be alive. So today, we finally have something to talk about, which is pretty cool. I'm actually relieved that we've got something new to talk about. It's also my dog Winston's 5th birthday today, so W Winston in the chat. What is going on right now is investors and traders are getting an opportunity to speed run experience. Okay, if you joined in the last 4 or 5 years, you are faced with an opportunity here to acquire a decade or more's worth of experience in that short amount of time, okay? If you think about it, when we just go back to 2018 at the end, we had the taper tantrum. 2 years later, we had the C19 crash. 2 years later, we had the 22 bear market. From those lows, we went on to do record back-to-back years in the stock market with a yen carry trade unwind. And now we've got a tariff tantrum and corruption and market manipulation all happening in plain sight. So let's get into today's episode, okay? Yesterday, we saw DT authorize a 90-day pause on tariffs and the markets ripped higher. We saw record days in the stock market. And here's where the comedic market manipulation starts to come into effect, okay? Because DT tweeted on his, whatever it's called, Truth Social, just before the pause on tariffs, saying this is a great time to buy. There was clearly a lot of insiders that knew what was coming because the SPY calls increased over 10 times 10 minutes before this announcement was made. And so essentially what happened is someone reports this fake news that was actually real news, okay? All of the world aped in on that news and we added 2.5 trillion to the market. The news was then reported as fake, so everyone dumps. We saw Japanese banks blow up. The president reports the previously fake news again, but this time as real news, and all of the world finance is sidelined and apes into the news, adding 4 trillion to the market in a single hour. So this whole traditional finance TradFi space is really just meme coins with suits. Okay, and this isn't a one-off because did anyone notice this is almost an identical playbook to what they did with the Bitcoin ETF launch? If we cast our minds back, what we saw in here was an announcement to say Bitcoin spot ETFs are approved, and this came from Gary Gensler, the SEC chair at the time, right? Directly from his account, only for a couple hours later for them to come out and say it wasn't really Gary that tweeted that, this was a fake hacked tweet, right? Our account got hacked. It's not real, okay? Market tanks, and then it comes out a couple of weeks later, actually, no, it's for real. The spot Bitcoin ETF is actually approved, and then Bitcoin goes on this big push to the upside. So they really are just playing these games in plain sight in front of us, and it really, again, speaks to what I always say, which is this is a very wild time to be alive. This is fourth turning stuff, and it might not be over just yet. We are getting extremely late in these long-term cycles, these multi-decade cycles, and this is how things tend to end, right? At the end of the major longer-term cycles, we don't tend to fizzle out. Instead, we tend to go out like a fire in the madhouse, and I think that's what we're seeing. Now, I want to bring it back down just a couple of notches, because as exciting as this might be, and I know everyone suddenly, having gotten smashed on the way down is now thinking, oh, finally the bottom's in, we've still got new highs, we've still got another chance to get let out. But just as I've been preaching for the last couple of weeks, not to pay too much attention to the panic selling, not to be driven by fear and emotions, the same is true on the way up, right? It's not acceptable to say, don't panic, okay, be contrarian, buy the dip on the way down, be calm, okay, this is all done, don't react to the intraday moves. It's all well and good saying that kind of thing, but when we get a big green candle, it's not acceptable to suddenly be FOMOing in here, right? To suddenly be jumping up and down and getting euphoric. Like, none of that is acceptable, okay? It works both ways. Just as we're not going to be reacting emotionally to the tape to the downside, we are equally not going to be reacting emotionally to the tape on the upside. And I know a lot of people, especially if you're newer, will be tempted to look at this whole thing that's going on right now and say nobody could have seen this coming, or, this is market manipulation, and to some degree, as I've already shown you, of course it is. But this was actually in the charts the whole time, and I'm going to prove that to you, okay, that nothing that has actually happened so far is particularly out of the ordinary. Yes, the moves are over-exaggerated. Yes, we've got this whole meme coin with suits thing going on, but I'm going to prove to you that nothing is really out of the ordinary and nothing has really changed from the game plan. Before I do, I have to show you this absolutely mind-blowing chart from NASCO here. This is the S&P 500 here, and you can see this parallel channel is absolutely beautiful. What's even crazier is if we go from the C19 plunge low, okay, and measure forward to the bottom of the 2022 bear market. See that? C19 plunge, 2022 bear market low. You'll notice here 663 bars. Watch this, because this blew my mind even more. We take the 2022 bear market low and project forward the same length of time. 662 bars instead of 663. Okay, that's close enough though. And where does it put us? You guessed it, right on the 7th of May timeline. Absolutely crazy. So if we do get this kind of double bottom or higher low, whether it's a lower low or a higher low, we're still targeting that cycle low for the 7th. And that will give us a perfect symmetry from low to low, setting us up for finally one large push to the upside. Now, does it go to a lower high and roll over and die? And do we go great reset, great depression? Maybe. Can we hopefully invalidate that setup and push to new highs? Time will tell. Okay, but for now, our job really is to find a tradable low, a high probability setup and get behind it. And then once we've done that, the next mission for us is to figure out whether we need to let ourselves out higher up before this happens and go net short on the highest probability short setup, or whether, like I said, we can indeed push this thing all the way to Valhalla and stay on trend for a while longer. Now, as I said earlier, okay, nothing is actually out of the ordinary. I'm going to prove this to you now. I know people would be tempted to say no one could have seen this coming or this is market manipulation. Okay, but what I'm going to do is just show you yesterday's video, which was made way before any of these announcements and big candles showed up. And I'm just going to show you how obvious this move was, okay? So do not listen to anyone that said this is a news-driven market or anything like that. I knew nothing about this news at the time I posted yesterday's TA. Okay, we're going to flick through these charts one at a time, starting with the yields. When we were coming into this touch of resistance before, I did say that it is very often that we get is a fake breakout that then reverses down. Okay, the yields love to do that, and we didn't right here. So which makes me think that's all that's happening. We're just getting that fake breakout, trap a bunch of people to panic, and then it's going to roll over. So that was what we were saying yesterday in the yields. And so far, what have we got? Exactly that setup. Okay, so you can call it news, you can call it market manipulation, or you can just say what I am maintaining, which is it was in the charts. Noticing gold confirming a daily swing low here. Looks like it is about to confirm a new daily cycle. That's expected right in the time. Okay, so gold expected to confirm a new daily cycle, and what did it do? Of course, confirmed a new daily cycle. Oh, that reminds me, I have been waiting to do this for such a long time, and I've not had the opportunity, but I finally have. Okay, check this out. I'm going to grab this trend line. This comes from here. We connect this wick and this wick. Okay, and then the fake breakout, then the real breakout, off it goes. I can show you how you can draw a trend line using one touch. Okay, now most people would say you cannot. I got this from Jordan Lindsay, so all credit is due to him. But what the market often does, which I find is fascinating, is it mimics the structure built into it previously later in life. Okay, so what does that look like? It means we connect this trend line, we grab hold of it, and we connect it to the upper wick of this candle here. Now notice, most people would say this is not a real trend line, even if we remove my yellow squiggle, okay, because it only connects at the wick. But we're going to leave this here because I guarantee you this is going to act as a legitimate trend line. Whilst it is not, by most people's standards, considered a real trend line here because it's only got one touch, I can assure you it's about to become a valid one with more than one touch. So I've been waiting to show you this for absolutely ages. There it is, okay? The one touch trend line. Again, I stole that off Jordan Lindsay, but it's fascinating how it works. But the point remains the same, okay? Daily cycle low should bounce, and then we can see what happens from there, maybe even an undercut to a weekly cycle low. And of course, there's always an invalidation for this. If we do a breakout, retest, and push, then we can get behind that. But again, is it fair to look at these candles in gold and say that was all manipulation, we couldn't have possibly seen that come in, or that was all driven by the news? No, the cycle low was bottoming, and now it's just confirming a new daily cycle. So again, nothing out of the ordinary there. It was in the charts before the news even showed up. So I drew a squiggle, something akin to this yesterday. I said I think this is what probably happens, and then we can go, and it's out of there that we'll be able to get some trades on. It's out of there we'll be able to get some counter trend bounce. Okay, so that's the stock market. Again, I didn't know about the news, okay, but it was in the charts the entire time. Is it highly unusual to do the whole thing in one candle? Yes, but so far, is the squiggle in play, right? A push up, touch of resistance, rejection, one final lower low into the cycle low, and then off we go. So again, nothing to write home about at the moment, right? This is all just charts doing chart things. We're just trading very, very technically right now. And because the cycles are still down, it tells us that we may have to play a lower low in the not too distant future into that May time frame. Now, I really like how the Camel Crew is positioned here. I wanted to talk about this because I don't necessarily think we can lose, okay? There's only a few scenarios at play here. And no matter what scenario plays, I think we're going to be just fine, okay? So let me run through the scenarios here. If we are right and the cycle is still down, then the highest probability trade comes from in this cycle low window here, okay? And then my yellow squiggle that I drew yesterday, rejection at resistance, rollover, lower low, and break out and go, okay? We can trade this, we can aim for the lower high, and again, we can stay long and strong for longer if the market proves to us that there is more gas left in this goose. Similarly, if we get that lower high, we can use that lower high to let ourselves out, and then we wouldn't have panic sold the lows, okay? Also, we'd be much higher up for the longer term accounts than we were at the lows. So happy days, right? And that's about as good as you can do in trading if there's a lower high coming. And of course, if we get what we should get, which is cycle to cycle things, then we get an ultra high probability setup to trade here, again, on the way out. Happy days. Now, if this is one of those ultra rare cycle inversions at the half cycle low, and this is just going to rip from here, well, we're positioned for that, right? We held on to the spot, even though people kept telling me over and over again, hey, Camel, cheat in your own system, and blah, 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 blah. I gave you my justification for that. I told you the close wasn't good enough for me. We'll get to Bitcoin in a moment, but we're still positioned for this, even if we don't have any short-term trades on in the trading accounts, right? We were doing the dip buying because we were contrarian, we were jumping up and down and screaming contrarian. If this is what comes, okay, and a big lockout rally to new highs comes, well, fine. We'll focus on the spot, we'll focus on the longer term accounts, and of course there'll be pullbacks and dips and cycle lows to buy on the way up. So we can't lose, whether we're bottomed here and this comes next, whether we are bottomed here and this comes next, so roll over to the lower high, or whether the cycles are going to do what they normally do, which is the normal yellow squiggle expectations, then we can again get behind short-term trades and let ourselves out for the longer term accounts, still be holding spot on long-term exposure. So I don't think there's a path here where we can't possibly take some money and take some gains from the market. So far, everything seems to be going pretty well according to the expectations. And there's another scenario here, is that if this is an inversion and we have started the bottoming process here, then at some point we are going to get 1 into 2 before 3, 4, and 5, whether it's higher high or lower high, or even if this is a correction, we get the A, B, and C, in which case, okay, the strategy is the same. We'll still have a tradable cycle low to trade. It's just instead of it being a new lower low, it might be a higher low, right? So it might look something like this, higher low, and then go. And then the exact same thing applies. We still get long out of the cycle low. We still have the highest probability set up to get behind. It's just it will come from slightly higher up than if it makes a lower low. So you can see in all outcomes, right, we stand in a good place to make gains and to do better than if we were just panic selling and reacting to the tape on the day. And again, as I showed in yesterday's yellow squiggle, call it manipulation all you like, but really nothing is out of the ordinary here. Something else I should mention is this is one of the biggest up days on record for the stock market, but the prior 2 times we saw it, in both instances, new lows came thereafter. Okay, so on a balanced probabilities, the cycles are in control still, the cycles are still down, and thus we can probably not get a true bounce until we've seen some cycle lows early May, which again is consistent with what I've been saying over and over again. And of course for Bitcoin yesterday, we were talking about this not being a convincing enough breakdown for me to dump my whole spot stack and incur a 24% capital gains charge. We've been talking about that all week. People have been upset with me because they're saying, oh, well, this is a weekly cycle low and we failed. And I was saying, look, it's not a weekly cycle low yet. It's not confirmed yet. And we can see that when we move on to the chart. If you put the weekly time frame on, okay, where's the weekly swing? It's not there, okay? We have yet to see the weekly cycle low. When we pull the DSS Bresser up, it has yet to cross, okay? We are still working on a weekly cycle low, so we can't possibly be drawing invalidations here. And again, we've been covering this extensively. We've been copy and pasting that fractal from back here, right? And saying we believe that this is what we're doing, something akin to this, where we kind of grind around, trap everyone. I gave you the Max Payne scenario over and over and over again, and so far this is exactly what we're doing. Nothing is out of the ordinary here, nothing is outside of expectations, and we will just continue to take this thing one day at a time. We even yesterday mentioned the VIX would probably get a pop up to a slight overcut or a slight undercut lower high, and then would probably set up a short entry. And of course, when we zoom in, that's exactly what we got, a slight lower high and a big red candle. So all of this stuff was actually in the charts, and nothing that is happening here is outside of ordinary expectations. And it really is a case of just sticking to the system, right? You need to stick to the system. We need to wait for the probability to set up in our favor, which means waiting for some cycle lows. They don't have to be lower lows. They just have to be in the correct timing window to be conducive to further upside. Again, we can't really lose here because whilst we could miss out on short-term trading opportunities if this happens and we go straight to this massive blow off top lockout rally, you know, we still kept all of our spot Bitcoin, as I said. We still got a bunch of dip buying in the longer term accounts that people were laughing at when we were doing it in here, but so far it's not looking too bad. And some of those positions, like the more obscure ones outside the box, like GME, are actually in profit. One of the members is up 22% or something from this GME entry, and it really seemed like the most nutty thing in the world to add at the time. But anything and everything is on the table all the time. So anyway, we're just going to keep doing us, right? We're just going to keep sitting here and waiting patiently, not getting caught up in the tape. And that means not panic selling on the way down, but also it means not FOMOing in on the way up, not getting euphoric on green candles and not getting fear, doom, gloom and panicky on red candles. We stick to the system because the system is the edge. If we start trying to get cute here and trading big green candles and panicking on red and trying to do things outside of the system, then we're stepping in the way of the edge. The edge is a mathematical certainty that over time with enough repetitions will allow us to extract money from the market. And if I start getting in the way here and taking random trades that are outside of the system, then I'm likely reducing my overall probability and expectancy and win rate. And then I will start to not have an edge. I will just be a gambler that is betting based on a whim, right? Based on gut feeling or based on emotion, based on trying to win things back or revenge trading or whatever it is, right? We've all done it at some point. I'm not trying to pretend like I've never done that. But over time and with experience, you learn, okay, that we can't be reacting to this. And again, as I've proven with yesterday's yellow squiggles, go back and watch them, watch what I was saying. All of this is really normal and to be expected despite all of the crazy corruption and narrative out there. And once again, that is because the cycles are in control and everything else is narrative. Now, one last thing we should probably mention, the thing I think we should be focusing on is the rate cuts. Notice how, at the moment, we're back to 80, okay? So the volatility here is absolutely enormous. But again, entirely correlated to the big swings in the 10-year. So watch for the 10-year to come off now. Watch for this to be the trap and the liquidity run. Watch for this to be the capitulative move. Watch for the downside action below 3%. And watch that put rate cuts back on the table. The CPI data is out today. And if you're part of the Camel Crew, then you absolutely know that we are expecting a colder print. We've been using Trueflation to gauge the overall direction. And it is undeniable that inflation has been coming off strongly. And you can see that in the downtrend of lower highs and lower lows at the hard right edge of this chart. Okay, so this should start to show up in the CPI basket. Of course, shelter continues to be a problem child. Shelter is the biggest lagging component, and it's the reason that we're not already well below target for inflation. But the funny thing about this is we are probably, regardless of what the inflation print says, going to be reacting negatively to the data. And that is because the cycles remain in control and the cycles remain down. So ordinarily, when the cycles are close to bottoming, we see colder prints, the market rallies because we are on our way to rate cuts and on our way to return to normal in terms of inflation. But given that the cycle is still down and given that we're expecting some kind of rejection at resistance here, as I said in yesterday's video, and a rollover to go and find a cycle low early May, we know that if inflation's hot, they'll swing the narrative to say inflation's sticky, okay? Trueflation is wrong, and that's bearish because we're going to be higher for longer in terms of rates, and the market will probably reject off of resistance and trade down. But even if inflation is cold, it's likely that, you know, the tape on the day is always going to bounce around, but it's likely the narrative will be inflation's dropping like a stone, sparking recession fears, okay? And a new low is coming. But is it really the inflation and the CPI that driving the markets? No, it's the cycles. When the cycles are down, we can remain steadfast in our opinion that there will be a higher probability set up to get behind in the not too distant future. So as always, expect the chop games and volatility into CPI. Expect these markets to ping around a lot more, but no matter what, the Camel Crew is going to do what we always do, which is continue to stay on the right side of the trade without any emotion, any bias, and most importantly, we're going to continue to stick to the system because it's the system that gives us our edge. I hope you have a fantastic day today. If you're a level 3 member, look out for any updates that are coming. Other than that, take care, all the best, cheers, bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a bad